So guys, this is our 19th meeting in the series of the Applied Elliott Wave webinars that I have been doing. My name is Nirav and I'm the owner of 50eyes.com. I'm a trader as well as I also do teaching, coaching, mentoring, whatever you like to say. And you can find more about my work by going to my website. You can go and check my past track record, which has been above industry standards, or my video course. And I also do have personalized classes for which you can make inquiries by going to 50eyes.com / training program LT, which is basically this form you can send inquiries from. That's about it for my work. And just to mention, the current 3-month classes or the training program LT batch is running, and it's only been a few classes. So if anyone is interested in joining, they can make the inquiries within this month. Otherwise, they will have to wait for the next batch whenever it will be. So that's about it for that. And before moving further, let's have a quick look at the disclaimer suggesting that all content presented here is for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here, then you yourselves will be liable for your profit loss or loss of profit. Moving on to the charts, the sequence we will proceed with is first of all we'll look at crude oil, followed by gold, followed by S&P, Nifty, and maybe some stocks, maybe, or if we have the time. I will first of all discuss a particular chart, and then I will ask you guys if you have any query. If you have, you can post that in the comment section. If not, then you can just say that it's clear, and we will move ahead with the next chart. And just before we continue, give me a final note that both the screen and the audio is there and clear enough so that I can just start the actual discussion from now. Okay, so Thomas says it is all good. So let's get started with it. And first of all, the chart of crude oil. Before we move ahead with this discussion, let me quickly check what we discussed in the last webinar, which was conducted, I think, on 22nd of June, 21st of June or 21st of June, and posted on 22nd of June on the website. So let's quickly check the video which was there, and the crude oil discussion was at 2:41. So let me quickly move there somewhere after 3. So by the way, if you guys are watching this thing as a recording later on, definitely turn the screen quality to 1080p. Otherwise, the visuals will be quite bad. So going back to the actual discussion we made, the analysis was suggesting that we have completed some sort of wave 3, if I recall correctly. Let me check on the chart as well. Yeah, so this is the wave 3 we were looking at, and we were planning to sell short for the wave 4, which was supposed to follow this wave 3. Whenever this wave 3 was complete, by the way, we did not have the correct endpoint for this wave 3. These were rough targets because we did not have the end for wave 3, obviously. So moving ahead with that, the analysis basically was wait for the completion of this and possible sell-off after that. And let's check the actual chart now of crude oil, and let me mark that date of 21st something. Yeah, so 19th June, the data must have been when we actually discussed. So from here on, we were saying that some upside is remaining for wave 3, which is actually what happened. Market went a little bit higher, and then there was this correction. It did not go to our expected levels of 23 and 38. By the way, they will have to be redrawn because they were just roughly drawn at that point in time. So I'll just take it from there, and so this will be your 23, this will be your 38.2. It did not touch any of those, so that means this market either is very, very bullish, or second thing is that it means that it might be continuing the sideways correction in wave 4. So if you are going to go with the bullish view, then both of these possibilities are likely. So either you can say that after this circle wave 3, you have the circle wave 4 complete here, and this is a sort of a complex wave 5 going up, or just a wave 5 going up. I think we have an overlap here. Yeah, so it will be some sort of not that impulsive, but diagonal kind of structure going up. Second outlook would be that if I just remove everything, it will be better, I think. Second outlook will be that circle 4 is not complete over here, but it is continuing as some sort of flat structure maybe, or some other complex structure. I'm of the view that it is most likely that it is continuing something like this. So basically an A leg down and B leg up and then C leg down as a wave 4, and it will then be followed by the fifth leg up. So that's my view for now on crude oil. So that means there will be shorting opportunities in this market for this wave C down. However, how much will be the length of this wave C is not really, I mean, that we can only get a quick estimate by measuring this A leg down. So I think this A leg is only 2 squares over here, rectangles, whatever. So if I measure it from here, first is over here, second is over here. So roughly speaking, 38 is the rough outlook or the rough level or the 1:1 level for this wave C down. Equality, I mean, because generally speaking, Elliott wave has this guideline of equality where it says that not even a guideline, just in general, we look for wave A and wave C. This is not a zigzag. So wave A and a wave C in a flat to be equal. So if this is the first leg down, I'll just measure it and then project it from this leg. And then we can take the 1:1 level as our target one. So roughly speaking, this looks to be our target one near 38-ish levels. And because this market is quite bullish, it has not given a deeper correction. I was hoping that it will fall down from here as a zigzag. But now that it has given some sort of flat or complex kind of correction, this means that this leg can either be played on the downside, or a better strategy might be to just wait for this market to fall, right? And once this market has fallen for the wave C, then look for longs, because of the simple fact that this market is quite bullish. That's why I'm saying that that possibility holds. I guess that is pretty much it for this one. I believe this is a simple enough analysis here. Either look for selling the wave C, or wait for C to complete and then go longs. Again, you can also measure the 23.6 and 38.2s and hoping that it might give a deeper C wave and go to 34. So you can say 38 is your target one and 34 is your target two. So those are the two main things here. Other than that, I guess there is not much to discuss here. So let me know, guys, if you are clear on this chart, or should we clarify, or if you have any questions, I mean, just post them and I will clarify. Aditya, Alex, Anand, Fraz, Nick, Thomas. Clear, okay. Okay, I believe everyone is sort of clear on this one. It was not much of a complex chart anyways. So moving ahead with the chart of gold, for discussing whatever this market is actually doing, which I believe is not really what we were expecting. Let's have a quick look at what we actually discussed. Around 905 will be somewhere over here. So yeah, so I was of the view that it will give at least one leg up for B wave up, and then it should continue down, straight down as a C, or sideways as a triangle, and then next leg up. So this leg was, I was quite certain, if I recall correctly. Actually, I was paying emphasis that there should be a leg up before the fall. So this part we were sure about. And later on, we were expecting some sort of fall, which was also a high probability scenario. So that was our main hypo one. Up leg and then down leg. By the way, the down leg would be bigger, is what we were expecting. And the second scenario or hypo 2 was that not even second scenario, this was, I think, low probability count hypo 3, which was suggesting that B is not continuing but is already complete over here. Single bracket B, single bracket A, and single bracket B. So this was a low probability scenario because generally wave B is not that steep looking, right? It takes a little bit more time. So that was the reason it was taken as a low probability scenario or H3, but seemingly it has done exactly that. It has gone down and then gone up straight off like that. So instead of looking at the past count now, let's move on to the actual chart. And gold chart around 22nd or 19th June something. You can press line over here. One sec. So there's the line, and we were expecting up leg and then down leg like that, which obviously is not what happened. Extremely low probability scenario H3 played out. But anyways, more importantly, there is some other thing that I want to discuss here. First of all, let me quickly give you a quick outlook on the daily chart. If you want a completely detailed analysis of this leg down, then I think in 2017, I recall I made a very detailed gold video, I think on February 2017. If not 20, yeah, I think it was 2017, not 2018. So in that video, I've discussed the two main counts on this leg down. The first one was that we were assuming that this was an impulse down, like a 1, 2, 3, 4, 5. This was a diagonal structure over here. This was a triangle structure over here. And it looked like a very picture perfect kind of impulse. Second scenario was that this was not an impulse down, but rather a W, X, Y. I think the Y was over here, and then X, and then Z. So anyways, leaving the W's and X position for undiscussed, basically because you can check that in the past analysis. The main point is that this was also counted as a correction because the triple zigzag is a corrective structure. And that was over hypo 2, if I am right, or whatever hypo. The point was that at that point in time in 2017, both of the counts were suggesting that leg down is complete and correction should be followed. So the target of 50-60 was given. So that multi-year analysis performed well. But now, at this point in time, we were assuming that the impulse down correct count was followed. That this was some sort of 1, 2, 3, 4, 5 down. So what has happened at this point in time is that we will have to go with the WXYXZ or the correction of this move instead of the impulse. Reason for that is that this leg has gone way too much up. It has almost gone higher than 90%, and it's almost near to 99%, if not exactly at 99%. And it's about to just break the last high, seemingly with the good volume, which is evident by the way these bars are closing almost near the very top. So you can also make the argument that no, this can be some sort of 1 and 2 and 3 because wave 2 can go to 99%, but I do not think that that is the case here. Maybe, but that will be considered as a low probability scenario. So the main scenario that we are left with here is that either this big correction ended at this point, right? triple zigzag ended at this point, and this is a new impulse up, so it will make new lifetime highs, right? Or the second scenario is that this correction is continuing as a sideways A, B, and C sort of movement. If you just look at the strength of the last part, then we will have to have a little bit of bias towards the correction getting completed here, but that would also mean that this is a fundamental change in things. Like, it may also point that people are moving their money from the stock market to gold and other commodities. So that could also suggest that maybe the stock markets are going to see a fall. But then again, correlations don't always work 1:1. They keep changing. Sometimes they are delayed, or sometimes they are at, beforehand, or they are playing beforehand. So, anyways, leaving the correlation part aside, at this point we are going to go with two hypos. Let's just say that H1 is suggesting that correction is continuing, A, B, and C. If that is the case, then we will have to consider this B as some sort of three-wave move up, in which case we already have a count which is working out. We can say that this is the A wave, this is the B wave over here, or can also be taken as a triangle over here. But let's just go with the simple count, and then we can say that we have impulse wave continuing up with the seemingly 1 and 2 over here, and then 1, 2, 3, 4, 5 for 3 over here, assuming the 4 might be over here, and this is the fifth wave continuing. So this could be the 1 of the 5, 2 of the 5, 3, 4, and 5, something like that, we can say, right? So this will be your scenario of ABC continuation. And second scenario will be that this whole correction was complete here, and in that case we'll replace the A with the 1 and B with the 2, and everything sort of remains the same. So let's just say circle 1 and circle 2. So fact of the matter is that I am of the view that this market will give a new high and go higher than this level. So basically it will jump up to 2100, 2200 levels is what it looks to be the case right now, if this analysis is correct, obviously. And since both corrective continuation as well as the new impulse up are suggesting that at least some upside movement is remaining, we do not have any reason to say that it is not. However, the important point is that entering longs at this point would not really be a very good risk to reward, but those who are having already longs in this market, that would be another case. So my view on gold is that one leg high should be seen and should be going higher than this 2000 levels. Exact levels, maybe we can check if we measure the ones and twos and project the fib ratios, but I think it will extend. And there is not much point, because at this point in time, although I am mentioning them as a hypo 1 and a hypo 2, and generally 1 means the more favorable count and 2 means the less favorable count, but in this case both are quite likely. As a matter of fact, the impulse going up is also a very strong count, if you ask me. So if it's actually going up as an impulse, then it will just exceed the targets, and you know how wave threes are, they just keep jumping up and up. So we will see, in that case we will see a lot of bars like this closing near the highs and seeing exceptional buying. So keep that in mind. I will avoid any shorts at this point in gold is all I can say. Strategically, new trades I wouldn't really say much from a swing perspective, but if someone is holding longs, then they can keep holding with trailing their stops, because after all, if it's a wave 3, then stops should not get hit anyways. So that's for my look on gold. Let me know, guys, if it's all understood. If not, then you can post your queries in the comment section. Okay, clear, relax, and so I guess other guys also have understood whatever we were talking about over here. So let's move on to the discussion of the S&P. And before we move on with the actual chart, let's check what was discussed in the last webinar 1555. So S&P, I was assuming that some sort of complex correction is going on. We also talked about a possible impulse, but in both scenarios, my view was that let me check. This was if this was the Z is complete here, then we were saying down, up, down. What was the other scenario? Other scenario was that Y is over here, and then after this correction, which should most likely be, I think, A, B, C is what I was assuming at that point in time. We will see a Z up. Let's check if I have clarified it in more detail. Yeah, so we were assuming just that correction down as a sort of zigzag, most likely. And after that, a new leg up, which should take it higher than the 3240 level. I believe I mentioned some levels to the upside as well. Anyways, let's leave that. I'm not able to find that on this chart. So whatever, let's leave it. The view was that from this date of 22nd, 19th June, view was we were expecting sideways corrective movement, and the correction I believe was this. I was assuming this as the A, this as the B, and then I was assuming there will be a C. So that was our one of the views. I think this was the main view, and then we were expecting one more leg up. And second view was that less probability view was that I think that this was a correction here. I believe that was one of the views where it will just jump up. Anywho's the scenario or the conclusion of both the analysis or whatever analysis was discussed was that we should see a high higher than that level of 32, 30 to 35 something. It has gone higher than that, and I think the target was a 90% retracement of this leg down. It has also achieved that. This is 90% line, by the way, 3275. Yep. So it has gone up and achieved that minimum target, and sort of is looking like it's reversing from that level as well, because all we have is just this is a 4-hour chart. If we go to the daily, then I don't believe we have a close. So yeah, we don't have a close above the 90% level as well. So it is sort of respected that believe that means that other participants were also believing that this 90% level is important, and they also had it in their minds or marked on their charts or whatever. So that's for that analysis. We have sort of achieved that level. Now let's look at the count at this point in time. So if we still going to the 4-hour chart, and if we still go with the whole move up as a correction, that is this leg up as a corrective movement, then we will still count this as a WXYZ or a triple zigzag, because that's the only fitting structure I can find. And there you can say that there you can have two views. You can say that this is the W here, X here, and Y here. If you are really bearish, you can say X is complete here and Z is complete here, which is not really unlikely possibility. The reason is, first of all, Nasdaq looks to be not making new highs along with the S&P. It is seeing more of a pressure, which is to be expected because it was faster than S&P when it was going up. Second reason, you can, if you are going to go with the correlations, you can have a view that that we have what you call gold also possibly set By the way, is my voice still audible there? Can you give me a quick confirmation on the messages section? Okay, that's his internet phone. Okay, so yeah, continuing on, the second thing that I was pointing out was the gold thing, but again, correlations don't really work one is to one, as I mentioned previously. So we will have to consider both scenarios here. Let's assume the other scenario, which is suggesting that X might be continuing something like this. Basically, what I'm saying is a flat, like an A and a B and a C. And then there will be one leg up. So maybe challenging the last high and even exceeding it by a little bit of margin. And then the sell off, which we were expecting since quite some time, will come into play. That is for the two main hypotheses. Basically, H1 is, I will say that X is still a flat and then there will be a Z up. So basically, wave Z up is still remaining, will be our hypo 1, and hypo 2 will be that Z is not remaining, but most likely complete already over here, and that we can see a sell off. So those will be your two hypotheses. Leaving that aside, if we go on a little bit shorter time frame on this chart, let's say 1 hour, then we can see that if we go with that flat kind of corrective view, which I just discussed, you can say that if that's the count being followed, then we have the A leg over here, and this is the B complete over here, and then C will come down. Now, the interesting point over here is that if we consider this as the wave B complete already, but keep in mind this is just a possibility, so I'll just not say that it is already complete. It is possible that it may just form one more leg up before the fall. But the interesting point is, if we assume that that wave B is complete here, we have one more evidence, or you can say one more point, that we can say that this is the A, B, and C as in a zigzag. Just to give a quick rough outlook, A up, B down, and C up is what you call a zigzag structure. And if this is the A down, A up, and this will be the B down, then C up generally will be 1:1 of A, will be either an impulse or a diagonal. Diagonals are also called wedge in price action terminologies. So any case, this looks like a wedge pattern or a diagonal. If that is true, then most likely this B is complete here, right? And then it can just fall in next session. That is on Monday. We should see a sell-off. Should be a fast sell-off. Should take it lower than 3160 at least, and it should be fast. Then the possibility of A B complete here will become more likely, right? On the other hand, if this analysis is not playing out, that is, this wave B is somewhere over here, right, instead of being complete over here, then it can just continue with some other formation that we will look at in the next session. But this wedge is what I thought was sort of a clear formation, so I thought I will just point it out, and it gives us a basis to analyze or judge this market in the next session. That's our quick sort of swing view, as well as shorter term intraday kind of view on the S&P chart. But do keep in mind this 90% level was important and is sort of getting respected. But the sell-off might start from here, because I pointed out in the other hypo that Z may have completed here. So keep in mind that longs should be taken with a bit of caution. Do your own analysis, short term and stuff, if you are going for longs, because if Z is already complete, fall or sell off can be quite quick. Okay, so let's move on to the chart of Nifty's 50. So let me quickly have a look of what we discussed in the last one, 27.15. Somewhere here, yeah, so this is the right one second. So let's move on and check what I was saying. Yeah, so one possibility was of LD, which was discussed later on. Another main possibility was this WXY, X, and ABCZ. So I was basically saying that this high should be taken out of whatever that is. So that high should be taken out, and that could be the wave Z. Second possibility was that this might be a LD, which was relegated obviously because the market went much higher. Or was no, wait a second. I think that was the LD maybe. Yeah, this was the LD possibility I was discussing. So that was our another hypo or hypo 2. So in any case, both were suggesting that one leg up is remaining. So that's was overview. Second possibility or sub variation of this hypothesis was that this wave B might be a little bit sideways and then up. So basically, we were waiting for a higher than the last high of June 8th or something like that. Let's quickly look at the chart and see what we are doing right now. 19th June. Okay, so here we are, and we have exactly done what we were expecting, went higher. This was one of the short-term targets, that is basically the gap, which has also gotten filled. Also, the market saw some temporary sell-off or corrective pullback from there on. So basically, it has achieved our short-term targets. I haven't checked if there were any higher targets suggested. I believe 78.6 has always been a target. Maybe 61.8 also we should check. So 61.8 obviously would have been okay. So this is exactly where the market saw some resistance. So yeah, this was definitely our one of the main targets. Obviously, it's almost near the box, so pointless to mention it again. Next level would have been 78.6, which is very near to where the market is right now. So this market has sort of been moving precisely as we were expecting it, direction wise as well as momentum wise. And it's near 78.6, so I am presuming that it will at least touch that level of 11,363 or 11,360. And if it continues in alignment with the S&Ps and Dow Jones, Dow is not at 90, I believe, S&Ps and Nasdaq, then it will at least touch 90 as well. So that will be our what you call target 1 or immediate target, and this will be our what you call target 2. So that's for the quick look on the possibilities of price movement. Let's look at the other thing or the important thing, which is the possible counts this market might be following. So count wise, I believe that if we say that this is the W over here and X over here, then Y and X can be taken here or it can be taken here. So both are possible. If we just go with this one, then we can say that 1, 2, 3, 4, 5, basically impulse may be complete here. So this will be the A of the Z, B of the Z, and C of the Z. So this one will suggest that gold upside should be seen in this counter after a possible correction, wave B correction basically. So wave B should take it a bit deeper, or maybe not so deep because previous corrections have not been that deep either. So basically the point is it should spend some time near this level, within this range between 78.6 and 61.8, and then go higher for wave C. So that's our first look. Secondly, if we just consider that X is over here, then we can say that this is the A, this is the B, and this is the C. That is very sort of bearish outlook, because if this is the C, then the impulse in wave C is sort of almost complete, and if it is almost complete, then sell-off can begin any moment. So generally, markets all around the globe follow one another. Basically, I'm suggesting that the major indices follow one another. So in case the S&P see a straight up sell-off, that is our hypo in S&P, which was the sell-off from that 90% line straight down for the wave C of the bigger structure flat, then I believe this hypo will be followed. Otherwise, I'm of the view that it will go at least to 78.6 and even further to 90. At least 78.6, I believe it should touch because it's almost there. 11,363 was the level anyways. So it can even touch that in the next session itself. That is on Monday or at least within this coming week. So from Nifty, I believe this will be our taking the X over here will be our hypo one. Or no, sorry. Taking the X over here will be our hypo one, and then A, B, C. Yeah, this will be our hypo one because we are expecting some more upside. In case we see a very strong sell-off, which is unusually strong compared to the previous sell-offs, then we can go with our second understanding, which we just discussed few moments ago. So that's for the quick view on Nifty, suggesting basically up, correction, and then up. So that's our quick view on Nifty. And I believe on a shorter time frame, we have some sort of clarity over here. So let me quickly check that on as well. Let's check 15 minutes. So on a shorter time frame, it looks quite like a 3 legs down, right? An ABC, and obviously if it's 3 down, then we can assume that maybe this is a and this is a B and C and D. Either E is here or E is here. So basically what I'm suggesting is up or correction and then up. If E is over here. So basically a triangle structure is what I am suggesting here. And this is sort of quite likely. The reason for that is simple, that this first leg down is very clear correction. And also this market is almost near the high. So generally that's how triangles are going sort of sideways in a very range bound movement. That's how flats are also. But in any case, my view is that in the next session, I think it will give at least one leg up, no matter what our long-term count is, hypo 1 or hypo 2, or even if none of them is the actual count which is being followed. I believe this counter will at least give one leg up. So that's for our view on Nifty. Let me know, guys, if it's clear to you or not in the comment section. It's taking some time. That is, by the way, 11363 or 11360. Our target one over here. What about the other guys? Can you quickly type it in the comment section so that we are clear on that everyone is clear. Okay, so apparently many people have typed in clear. So yeah, Nick, nice pointing that out. As Faraz previously was asking about wave 5 being higher than wave 3, just generally the rule is that wave 3 should not be the shortest. It's not like wave 5 has to be bigger than wave 3. So we just check the wave 3 in comparison to wave 1. And if wave 3 is shorter than wave 1, then we go on to check if 5 is shorter or not. So anyways, guys, I think we have discussed all the main charts that we look at. What were the stocks we looked at last time? So maybe we can, check a few of them maybe. Amazon is what we looked at, and Aurobindo Pharma is what we looked at 47.18 and 37.18. So let me check if I have the labeled charts of those stocks, and we can follow them in this session as well. Amazon. There is no such rule as that phrase what you have typed in. It's 3, 4, 5, and this one suggesting that 3 is completing here. Okay, I believe we have some clarity on the chart of Amazon. 4 and 5th is what I'm expecting. So let me just quickly pull it over here and see. So let's quickly check also what was discussed on Amazon 37.18. Yeah, so Amazon was actually exceptionally clear setup, and I think I emphasized it quite enough in the last webinar as well, that we had first a break of this very important BD trend line and then a retest. It makes up for an exceptionally good long setup. So anyways, going back to the actual chart, let's check uh, Amazon over here. Yep, so there it is, and let me just quickly mark 19th June as well. So there it is, and view was long. That was the only view on this chart, and that's exactly what it has done. So an exceptionally good trade there, exceptionally clear trade as well, not just good. So went up quite a bit, I think 33% or something. And the risk was also like almost this would be a stop loss. So the risk to reward was like this was an exceptionally clear setup, even if you were exited over here somewhere, roughly speaking. This was like a very good risk to reward as well. What's that thing? 4:1 or 5:1, something you would have been able to get out if you had been able to capture the whole moment, which again is a art or a skill in itself. Anyways, leaving that analysis apart, now we have two views coming in. First one is suggesting that this is the 3 corrective 4 up 5, and that would mean one more leg up before the fall. Second is that I have some long-term count suggesting that this might be some sort of Y, but that's a low probability scenario as that's an H2 or a hypo 2. So that means that as long as this wave 1 high is held, that is as long as 2800 is not breached, this count is valid. This impulse up is still valid. However, given the fact that this has sort of broken below this trend line once, this red trend line basically, so we will have to assume that this market is might be losing the strength, and this might be an indication that it is near the end of its movement, which is obviously is what the count is suggesting. 3 here, 4 here, and 5 here obviously means that, and then 5 of higher degree. So yeah, keep an eye on Amazon. Short term wise, you may look for longs, right? From a strategic point of view, you may say that if you are bearish on the whole stock market, then you may say that no, I will wait for this leg up to complete and then sell short once that same is complete. But I believe from a shorter term perspective, if you wait and let this price action form some sort of clarity over here, then some longs might be visible over here. So that's for the quick look on Amazon, but the clearest trade which was over here is already gone. That's, I think, enough for Amazon. If there is any doubt on this one, you can quickly post in. Otherwise, we'll just look at the pharma stock we looked at the last time. Let me pull that out as well. Yeah. So I think the stock we discussed last time is not really the clearest setup as of this at this point in time. And though we can have a quick look at it anyways. We were discussing Aurobindo Pharma in the last meeting, I suppose. And let me quickly have a check on the view discussed on that chart as well. Yeah, so we were expecting one more leg up after this wave 4 correction is complete. Right, that was the basic view we had. Actually, I have not really pinpointed the wave 3 end, but the main view was that wave 3 is about yeah. So we were assuming wave 3 is most likely complete over here, and then correction for wave 4 and then up leg. So outcome or the conclusion is up leg from the level of 387 something. By the way, there was a problem with the recording of the last webinar, so that's why this print is so unclear. This one I believe will come out okay as I've set it up everything properly. So let's quickly have a look at what happened after 19th of June. Somewhere over here we can say, yeah. So that's our 19th of June. So basically I have repositioned the wave 3, but fact of the matter is actually did give a correction. We can just say that 3 was over here as well and count this whole thing as a corrective wave 4, and this is the wave 5 up. At this point, I'm assuming that two things. I'll just point them out quickly. Firstly, I'm assuming that wave 4 is here, and then that would mean that wave 5 is either complete over here or is it still continuing. Secondly, you can just play around with the positions of 3s and 4s, but the point I was saying this was chart is unclear is because we don't really know if the wave 5 is complete here or it has more upside remaining. So if it goes higher, then I have a trigger placed already around 840, as you can see over here with this orange line. If it goes higher than this level, then I will look to count a proper impulse up and look to sell this market. However, if it goes lower than this second 780 alert which I have, then that could mean multiple things. Maybe wave 4 is still continuing or whatever. So only if it goes higher, then we can have a proper setup. So it is both ways. It's a analysis which will become clear in time, and only if it goes higher, something like that, and then we have a proper impulse, then we can do some analysis for selling this. If it just goes down, then it is unclear if I was here and it's a sell off, or if it's just continuing corrective movement and then there will be like a. So that's why I will say that it's a wait and watch market for now. And that was all I had to discuss. I believe we have discussed all the main charts and two stocks, one from NSE and one from Nasdaq. So that's about it from my end. Let me know if you guys have any query on this chart or on any other charts which we have discussed during this meeting by typing in the comment section. One more thing, guys, I would just like to point out that it takes a lot of time to conduct these webinars and prepare, because obviously I'm discussing the charts in front of you, so it looks like it's like only 1 hour, but it takes a lot of effort to come up with this analysis. Many hours have gone into it, and then again posting all of this on the website, and I've just tried my hand at transcribing softwares. So there's a transcribe. I don't know if it will be of any use to anyone, but my point was that it takes a hell of a lot of effort for me to put this up. So I will highly appreciate if you guys share this content as much as possible. And lately I've seen the participation also is not really there that much as I would expect to be. Talk of S&P, we were an impulse wave up. Okay, Faraz is asking about the impulsive view. Let me check. that. That's a good point. As if we are in an impulse wave up. So in that case, did I not discuss it? That was the second hypo. Maybe I just missed out. In that case, I believe we will be taking this as our 1, 2, 1, 2, 3, 4, 5, 4, 3, 4, 5, 4, 3, 4, check 3, and then correction, and then up. Yeah, so in that scenario, I believe I'm taking the 3 here, 5 here, and then a correction, and then new high. That is basically 1 and 2. If you were to be really clever with your analysis, and I know it looks a bit overextended, but you can also count the 3 ending over here and 4 over here, because generally 4s are flat. So if it looks like a flat kind of structure, which is this one, then you will try to put the 3s over here. So anyways, the count is, as I said, that will be something like this, would be our main count. If you are going for a new lifetime highs on the S&P, which I don't think should be happening because this leg down was exceptionally fast. So we will definitely want to see a continuation of this correction. But also looking at the past falls on this Dow Jones chart historically, I've seen that most of them don't just form a V shape. So I don't believe that we will be going with that impulsive analysis. So that's our low probability scenario. So I guess, guys, that's all for this discussion. I'll later on put this uploading on YouTube and the website. I will appreciate if you guys share the links on my website. The last uploads are always posted in the market analysis section. If you click on it, then it will be visible. Also, you can just check the recent post. The last post will be available at this point or this location. Alternatively, you can just go in the market analysis page and the last one will be the top one. So you can also check other analysis of other charts if you want. Then there's a segregation, what do you call it? Contract wise or not contract wise, script wise. You can check some of the other analysis. Some things I'm not really following with much detail in every webinar because of the lack of interest, like natural gas is not followed regularly. But if you want to check the past analysis, natural gas, Bitcoin, and DAX are also there. You can check all of that. And I would highly appreciate you guys sharing it. That's what keeps these things going. And last thing again, if you guys are interested in the video course, then check out the page of the video course with this Elliott Wave course page on the courses section. If you are interested in the 3-month program, as I mentioned, if you are interested in joining the current batch, you will have to make the inquiries before July ends. You can go to 50is.com/ training-program-lt and make your inquiries from this form. You can also check my records over here just to check back the person you would be associating with. And I will highly advise if you check the actual links. And this is just a 3-year record, and you can see the accuracy has been higher than 80% all along. So that just goes on to show the exceptional skill level. I believe 3 years is not a coincidence, so I have not taken the time to check the 2019 records. It takes like 1, 2, 3 whole days, not even one, to properly do this. So anyways, that's about it. And thank you guys for joining in, and see you guys later on in the next webinar. Bye and take care.